Good evening, ladies and gentlemen. Today is the 6th of August, and there was an RBI event in the morning. And as has been the case with all RBI events lately, it was a non event. And that tremendously helped out with the kind of crash in premiums that took place. I exited, now the time is about 2 o'clock, mostly because from where the position is, I potentially see a maximum of 4 to 5 points of a fall off, maybe slightly more than that. And considering that I had already had a very good day, without having to do much, I figured it was a good enough point to exit. And yeah, for any non-direction, actually any credit-based strategy would have been all right today. And because of the position that I entered yesterday towards close, where in my double diagonal only the strangle leg executed, that lost me about 16,000. So I exited that right at the open. And after that, the rest of the day was pretty much smooth sailing. So I hope you had a good trading day. Not much to talk about today. It looks like we're going to consolidate here for now, and there's potential for further upside. I think dips towards 16,100 will definitely get bought. A lot of people sitting with FOMO who didn't get in before the 16,000 breakout, they'll use that at least for an entry. And yeah, have a great weekend. I will catch you on Monday. If I'm not trading on Monday, I'll post about it on Twitter. Take care. Bye bye.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Today we have opened relatively flat, but the issue is there's an RBI event today. I had by mistake entered this overnight strangle position. I wanted to carry a diagonal spread, but my buys didn't execute. So I've just exited this because it's going to just be a bother. And now I have entered the 16,100, 16,450 strangle. The thing is, generally, what I found over time is it's probably better if there's an event at 10 o'clock to enter around 9:45. But the thing is, I've kept my distance and entered a little bit earlier. You can see even after I've exited, so this buyback, both options had gone up in value because there will be a continuing IV spike invariably until the actual event itself. And during the event, there generally is a big kind of a crush in IV, if of course the outcome is that nothing has happened. And once again, the event most likely to be a non-event. We'll only know once the governor is on the screen. I have CNBC running in the background, and yeah, just going to wait and see how things pan out. Okay, the market is very jittery. For like a 20-point down move, these went almost to 50 and these crashed by 10. In fact, I was in a market profit of 2.5 points then because of the IV crash on the call side. Anyway, market has some jitters. For now, my idea is either of them expanding till about 55 is perfectly fine. And if it's just because of an IV spike, then I won't even consider. I need at least 16,250 on the downside or 16,350 on the upside to be tested before I get any kind of aggressive with adjusting this position. At least until the event takes place, whatever happens, happens. Of course, if I'm ever at a market of here today, I stand to get quite a lot. So 10 points mark to market is when I will cut out of the entire position. Also, just want to cover a few things. Now, HDFC Bank is making an up move. Towards the end of today, I will have to manage this position. I'll go over how I do that. Secondly, actually into the event itself, probably have to add 3 of this into the event itself so that I don't have much of a problem with a continued up move. This position has gone all over the place, really. I think I was a little too aggressive with the writing of calls. But it's okay. I partly covered the upside risk. I completely cover one lot at least with shares. So instead of doing 3, I will do 2. Because for one lot of shares, I have 0 upside risk. And the power of adjustments, this HDFC move of almost 10%, where my calls went deep in the money. I had managed earlier by one selling an in the money put to cover all the losses that the in the money call would make for me. So this one, and to add a little decay to the spread itself, added the 2650 straddle, and now from quite a deep negative, this position is in the positive. The context is we had to start from this 31 expanding all the way to I think 200 at one point. So far market is perfectly sideways, holding around the 16300 mark. All the positions also will be building around 16300. Quite sure 16300 straddle has a lot of takers. Yeah. So open interest at 16300 is max. After 16300, in 200 with almost 30 lakh and 16,000 with almost 30 lakh. Yeah, majority of people pivoting around the 16300, which is trading for 200 roughly, giving us the range of 16150 and 16100 and 16500 on the upside. We'll keep you posted. Time is 9:44 and market is definitely a little bit in unfamiliar territory, and it'll be interesting to see what happens. Okay, so quite an IV crash before the event itself. Not a lot happening on the market side, more or less held flat, and that has benefited my position quite a lot. In fact, given me almost about 8 points of decay. What I have to understand is this is just me exiting my position and booking this. So this doesn't really count, but quite a fall off, especially in the call side IV. And yeah, idea will be also to protect a lot of that in case we do see a move because of the event. We'll keep you posted. Time is 9:56 and we've got 4 minutes to go for the press conference. Okay, so far the event seems like a non-event, but suddenly there has big red candles forming. Bank Nifty seeing profit booking, and Reliance as well dropped 30 points in a matter of a second. So issue is this put is now starting to expand quite a bit. I have given up about 2 points from the peak of the IV crash, and there seems to be a little bit of a big put side IV spike along with a combined profit booking. So from here I have a trailing stop loss of about 3 points because one, I have a buffer already, and two, after the event IV will continue to crack over the period of the day. So there will be some jittery moves. If I keep a very tight 2 point mark to market basis exit, then I'll very easily get pushed out. So roughly about mark to market of around 2,40,000 is when I will just exit the position. I will not be doing any adjustment until the event is done, and it's half an hour post that, because there will be random moves. There will be extremely random moves taking place during the entire thing. So yeah, so far very dovish stance, and looks like everything that the market wants is going to be provided, which is ample liquidity, no change to rates, no ambiguity, no talk about what might happen in the future. Inflation was mentioned just once, but then almost in a non-factor manner, and I think the governor is essentially trying to keep all financial institutions happy. This is almost catered to how dovish can we sound without literally saying that, guys, you're safe, 100%, we will do everything to support you. So but yeah, that kind of thing will lead to profit booking clearly. Some major red candles on the bank Nifty, one big red candle. We'll see if 16250 breaks on the Nifty. Most likely what I can consider doing is pushing down my call to 16400, but don't want to be in too much of a rush to do that at this point. We'll keep you posted. For now, anyway, on a market basis, I have my exit plan. Okay, so we got pulled to 16250, and yeah, Reliance is the one that's really tanking. Reliance is crashing. I mean, it's given up 60 points, and Bank Nifty as well. Big moves on Bank Nifty. I've moved down my call to 16400 because at this point there will be too much of an imbalance in premiums, and this now puts me in a situation where in case the puts do continue to spike, I will at least have call side credit that can give up. What is more likely to happen is that unless this profit booking really continues, and let me see, so around if 16200 breaks, then it's just the entire trade has to get cut. There's no option but to do that if 16200 breaks on the downside. But apart from that, I think if this dip gets bought, ideally the expansion on this call should be more than compensated by what the put will lose due to the kind of IV spike. But yeah, Reliance completely crushed. Where is Reliance? That happened. Interesting. Anyhow, I mean, ideally I would not want it to have moved my call down, but it all comes down to risk management. Once again, I cannot sit on puts that will be trading more than twice the value of my calls and then explode. Most likely the dip invariably lately, as has been the case, will get bought, and this will be like a panic move. But I cannot hope that will happen. I don't work on such a thing. So yeah, we'll keep you posted. Time is 10:40. Okay, so apparently the Reliance future deal is most likely to not go through, which is why Reliance is getting crushed. And probably banks who have given money to future are also concerned, and Bank Nifty seeing a dip. I don't know. The analysts on CNBC thought that it was a relatively bearish stance. It didn't sound like that to me, but that's what the analysts seem to think. Now, what is happening is into this down move, the 16100 puts at least are not gaining a lot. They're not going up by too much versus what the calls are giving up. And I have my mark to market exit condition. And into this dip, I do not want to be taking additional call credit, because if there is a pullback, then the 16350, so even if you don't go by the day's high, you go by the average price of 68, pulls back to something like that, then it'll be just a nuisance, be a big nuisance to handle. Because yeah, if there is like a dip buying situation where we somehow start heading back to 16300, that'll be unlikely though, because Reliance is not gonna take up all the gains, which is probably why that call has crashed as much as it has. It's not a very attractive consideration for me. I would much rather book and exit my position and take advantage of the fact that whatever IV crush did happen has given me some amount of points that I'm sitting on. So that's the plan. We'll keep you posted. Time is 10:54. We're not even halfway through the trading day, and potentially this position, like this is my pullback or otherwise, also can continue to give up easily another 10 points from here. So that's why I think having a 3-point exit is fine. Keep you posted. Time is 10:54, and yeah, has been an interesting morning session so far. So interestingly, a lot of strength now coming in from IT. Nifty IT is heading up because Reliance and Bank Nifty are on the downward trajectory. IT, which was quite mum in the morning, is now in the green. So yeah, nice. So anyway, for now that is that, and we'll keep you posted. 10 o'clock, sorry, almost 11 o'clock. Okay, so the dip getting bought to an extent, mostly because the IT is going a little berserk. So the way I see it is, I mean, when you fell from here, you have to understand that Reliance is not really just going to immediately pick up these 50 points. It's not going to come from Reliance. Bank Nifty as well saw this profit booking situation, and now is forming this higher low thing. So Bank Nifty might potentially head back to 36, and Nifty IT should face resistance at the higher levels. So all that being the case, my 16400 call expanding, I'm not too concerned about it at this point of time. If this expands to the range of 45, then I will not be left with much of an option but to take in either additional put side credit or roll away my call, one of the two. And wait and see. I'm not expecting this to quickly burst over 45 anyway. And yeah, trailing the same 3-point exit. And we're not even halfway through. It's 11:20. But yeah, I mean, whenever there's an event, if it is a non-event and really no outcome, then obviously the reward of being in a credit spread of any kind will be good due to the IV crash. The thing is, when your position is centered around 16,250 in a strangle, which is generally it is the most IV negative trade you can take, it's like shorting IV. When there's a down move, the put side IV spike is generally more than whatever the calls fall off. So despite now the position coming to where I'm centered around, there is some amount of put side IV spike. What I'm looking at more concerned about is this 16,300 straddle. Well, I mean, the pricing of it currently is almost expecting there to be a buying of the dip. But what the dip is coming from is Reliance really, once again, continuing to take a beating on the downside. And IT has stopped its up move, and Bank Nifty also made a small dip to 35,800. So, yeah, the put side is going up, call side not necessarily giving up that much. And back to trailing stop loss. So if there is like a green candle that pushes us over 16,250, immediately these puts will lose like 2 points without the calls gaining anything as such, because whatever that urgency as the day's low breaks, people will start buying put options. It will push up the demand, and the supply will be available only at higher prices. Yeah, we'll keep till about 380 on a mark to market basis, and then risk off the position completely, which will be by spreading the position very wide, or just take a complete exit. Depends on how much of an IV spec there is in even deeper OTM options. If we break the day's low, which as of now we are about to, probably. Depends on what happens here. To keep you posted, time is 11:40. We're not even halfway done, but Reliance taking a little bit of a beating. I have Reliance shares, so just get some peanuts on in case Reliance now heads down and stays down for a while. I've sold the 2,200 call. I have about 1,400 shares. So once my margin frees up from intraday, I will push it into this. Yeah, we'll keep you posted. Time is 11:43, and we're heading towards the day's low, which is leading to quite the IV expansion on the. Okay, so we're in an interesting juncture now. IT showed strength and more or less held on the upside for now. And Bank Nifty the entire time. So this looks like a potential consolidation, again breakout type situation. And yeah, Reliance I don't think is going to make some big recovery today. This is bad news. Fundamentally, people will be like, okay. I think what people will be thinking about Reliance right now is, oh, okay, bad news, it's going to dip. It might dip towards 2000, maybe even 1900, and we'll buy at that point. Fact of it will probably be that it'll probably maybe dip at some point 50 points from here and then pull back from there, or it could go on. It doesn't matter. But this immediate upside on Reliance is not going to come. That short covering is not going to come. So that's one thing on the Nifty. These calls are slightly expanding now to 38. And the way I see it, there's clearly a massive futures premium, right? Yeah, there is trading below 16,300, but the call option has 10 points more in it. Must be a pretty large futures premium. And what my thought process now is that if this starts once again, the same thing, above 45, I'm really afraid of this. Below 45, it's okay, because that real short covering won't come until, let's say, one of two things happens. Either Bank Nifty now makes this move, right, heads up, and or IT takes out this and heads higher. This Reliance is going to be not such a big threat. So anyway, that's why I'm very comfortable at 37. Even if it expands to 40, 41.2, I'm fine. And it won't that easily. If you see, so if you see, precisely around above 42 is where it might lead to a lot of people who have shorted this during this entire time, seeing the down on Reliance, this entire time people who have shorted here at this 40, they'll only get scared probably above 42, 43, 44. So yeah, for now it's been a very good day, and I'm continuing to trail. Okay, the time is almost 2 o'clock, and I'm waiting for one green candle to take an exit. Basically, the way I see it, has been an immense IV crush the entire day, and potentially from here maybe there's another 5 points that is possible to decay, and yeah, I don't particularly think there'll be much more than that, not more than perhaps 5 points from here. So, and that requires the market to not make any sudden moves in the end. So, considering that it's been a good day, and in fact, so you can't even account for this loss because this is just from exiting the position in the morning. So it doesn't even count. So, good 6.5 lakhs. It is 2%, and I will take that exit just because beyond this, I don't stand to gain too much more, and I don't want to have to deal with any kind of last minute shenanigans, any positions getting cut before the weekend, things of that nature. The question is, am I the one causing slippage to myself? By no, not in these sets, should not be the case. Yeah, and exiting, I'll have to give at least 1 point in slippage. That's a given. Yeah, that's about it. And so good 4 point. Let's see. 2.25, 6.75, my side is so good, like 6.4 for the day, a good 2%. And this will continue to show mostly because this is a position that I've exited. Thank you so much for watching, and I hope you have a great weekend. I will decide on Monday depending on how we open whether or not I'll be trading, and I'll keep you posted on Twitter. Have a great weekend. Take care. Bye bye. Okay, so one more thing. What I'll be doing is I will be taking this trade, which is a double diagonal on the bank Nifty. Basically, what I'm expecting the range of our bank Nifty to be is dips to 35,500 will get bought and rises towards yesterday day before's highs around 16,200x that will get sold. So roughly with this kind of position, my break evens will be, I mean, can't go on this because it depends on IV increase, but if we do have a big up move or a big down move, should be an IV increase. This gives me a good range, and the trade that I'll be taking. So I'm shorting the, I'll do this in sets of 20 lots so that don't have much slippage. And I'm buying the monthly hedges, so they will gain a lot more in case there's an IV spike. You'll notice that invariably when I do stuff like this, I don't allocate more than 10% of my, roughly around 10 to 15% is the max I'll allocate at entry. Means that if it goes wrong, then I have a lot of margin left to manage it. Okay, looks good. So I'm shorting the 35,400 put, 36,300 call, buying 200 points away in the monthly bar at on both sides. Oh damn, it's done in MIS. Yeah, zero. Okay, what now? Cannot convert. Okay, create another basket now. You can't convert MIS to normal in bot options. That did the trick. Yeah, it did. This is such stupidity. Can you believe it? I'm having to sell it and buy it back a little more expensive. Sell it and buy it a little back more expensive. Stupidity of the highest order. Can't believe you can't actually. Okay, so 80 lots, and this is the bank Nifty position now. And because of whatever gimmicks that I had to do, I actually lost. But I mean, I guess not much else. Okay, how much? Yeah, I lost on that. Anyway, now I have entered this position, and let's just go over how it looks. So yeah, I have pretty good break even. So you can say roughly 35,200 on the downside and 36,600 on the upside. And I am relatively biased to the upside on the bank Nifty from where we are. And yeah, we'll keep you posted on how this goes. In case I'm not trading intraday on Monday, then I will post about this on Twitter. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, Do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.